All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about ASML, right? So we are going to take a peek at the chart today, all right? And go over both the bullish and the bearish scenario, so that way you guys can be prepared, know what it is that you need to look for, for these scenarios to play out. And we're actually going to go over some of the fundamentals of the stock, okay? We're going to take a look at some of the key points: growth expectations, technology and demand, the export control regulations, and advanced systems. And then we'll go over their unique position and how, in a sense, all roads lead to ASML when it comes to the chip sector, right? Intel, Taiwan Semiconductors, Apple, NVIDIA are just some of the ones to name a few. Okay, so we'll break down the impact that they have on those other companies. And then, we'll talk about the phrase all loads lead through ASML and kind of break that down for you guys. And then we'll go over a bullish thesis. All right. Basically behind ASML and kind of review that bullish thesis. And we'll go over the bullish scenario with price targets. We'll take a look at the bearish scenario and also a base scenario as well too. And these are for more longer term projections on the stock, right? So we'll cover some of the short term price action, okay? And then we'll kind of go over, if you're looking to be a long-term shareholder, some of the bullish base and bearish scenarios, okay? So as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention I started a completely free newsletter. It's called Investment Intelligence. There's a link in the description and comment section. You can sign up for that, completely free to you guys. Giving out free, valuable finance content every single week, as well as I try to sprinkle in some free trade ideas. This was one on Tesla, going over the conditions we had and the bullish chart pattern that formed. All right, and you can see that that played out very nicely. Also on ExxonMobil, we were talking about looking for a breakout on the RSI and a bullish MACD crossover. And you can see we got both of those and it went from 111 to 117. And not all of them are long positions too, right? We also have some short trade ideas in here. SWK, this is Stanley Black & Decker with the rising wedge, looking for, a breakdown to some specific levels. And you can see how that played out and came down exactly to those levels right there. So sign up for that. I do want to mention that today's video is actually a viewer request, and you can head on over to the Ko-Fi platform and you can request a YouTube video directly through Ko-Fi. So that's where I'm doing all of the viewer requests. Today's video was a request from Ko-Fi. Not only can you request specific videos on a topic of your choice, but you can also book a 30-minute or a 1-hour session directly through Ko-Fi. And all of this is done by clicking on the commissions page right here. It's the best way to, basically reach out to me if you're looking to book a session or, request a specific video. And if you ever enjoy the free valuable content that I put out, you can always click on this buy a coffee button. And it's basically a way of giving a tip or a donation. Now, let's get into the video here. And there's two scenarios, right? I mean, obviously, the stock is going to go up or down. So, the bearish scenario is going to be a 5-wave move to the downside. So that's what these numbers represent. 1, 2, 3. And we hit our wave 3 target at the 1.618, Fibonacci extension here, which is a valid wave 3. But this could also just be an ABC down, okay? Your 5-wave moves tend to be your impulsive moves and indicate the trend, and your 3-wave moves are known as an ABC, and those tend to symbolize a correction. So you can see the stock moved up massively, and it's very possible that this is just simply an ABC down, and really 563 is that level we need to hold to really confirm, that this was just an ABC and that we're going to continue heading back up higher. Okay, so below 563, we're bearish. All right. And we're actually looking for it to potentially come down all the way to 464. But, two things that I'm really paying attention to below 563 are going to be these gap fills, right? So there's these little blue boxes here. And what these are gaps on the daily time frame. And these gaps, they do tend to fill about 90% of the time historically, right? So the big question is, are these gaps going to fill sometime soon, right, in the near term future, or is it going to take until the next bear market and the next bearish, cycle in the market for it to fill? It's already had a very significant pullback, right? Basically from 760 all the way down to 560. So it's lost 200 points right there. What we're looking for here essentially is to see, again, if this is going to be this bounce up right here, if this is going to be a wave 4, okay, out of our 5 to the downside, then we would break through that 563 level and come down here and start to fill these gaps just above 480 and right around 520. Okay, so again, we break through 563, it's these gaps are going to act like magnets and really draw price action down to them. And if they want to keep going lower after they fill the gaps, it's very possible they could go all the way down to 464. But if this is a completion of our ABC down and we're starting our next move up, okay, we really need to hold 624 as support. So currently it's going to be overhead resistance. If we can break above this level here, retest it, right, as this drawing shows, retest and then get a push higher, that's when we'd look ultimately for a retest to the previous highs. And if we can break out past those highs, okay, ultimately the bullish price target here is going to be 816. All right, so that's my thoughts on the charts and the candlesticks. If you take a look at your MACD right here, it's trying to do a bullish crossover right now at the moment. Some examples of some bullish crossovers in the past are here, here, and here, as well as here. And you can see how the stock price reacted after those, right? It reacted pretty positively, right? Bullish crossover here, had a nice move to the upside, bullish crossover here, nice move to the upside, bullish crossover here, nice move to the upside, bullish crossover here, nice move to the upside. And, right here is going to be a pretty valid example of, basically a failed bullish crossover, right? So here we have the bullish crossover and we just get a small move to the upside. And then we actually come down and cross back down below on our MACD right here on the daily time frame. So that's what we need to be cautious of right now. Okay, the big question is this going to turn into a bullish MACD crossover and cross above and lead to some, positive price action? Or is this going to be more of a, look above and fail where it crosses above, doesn't really gain any traction and crosses back down below? Those are the things that I'm really paying attention to right now. And, if we do get this bullish crossover, it supports the thesis of, getting a bounce up and a move up towards that 624 area. Whether or not we get all the way up there will be a little bit more determined if this is going to be just a wave 4 to do wave 5 down, or if this is going to be, the completion of an ABC down, at which point we'd be looking for a 5-wave move to the upside. Okay, your daily RSI right here is pretty oversold. You can see it really hasn't been this oversold in the past year. When you take a look over here, you can see back in October, which was, the S&P 500 lows, is when this thing was last oversold on the daily time frame. And currently we're back at those conditions. All right, and we're going to see, is this something, again, that's going to be able to help the stock rebound, or is this just a sign of weakness that the stock is going to continue breaking down? Right, when you see it at overbought levels here, that's a sign of strength, and the stock pulls back momentarily, but ultimately to continue going higher. Right, continues going higher throughout this period here where it's overbought. Over here you can see overbought again, right, overbought, and it continues to go higher. Overbought over here, continues to go higher, and now we're oversold. So the question is, will the stock continue to go lower, break through support, or is this a sign that it's potentially putting in a short-term bottom and looking for a move to the upside? Now, some of the key points when you take a look at their earnings and you talk about the stock from a growth expectation standpoint, they are working through a strong backlog and expects growth this year towards 30% despite the current macroeconomic uncertainty. The company is experiencing demand for its products and services driven by secular growth drivers in semiconductor end markets such as electrification and AI. So they're basically talking about, the world trying to move more towards electric, such as electric vehicles, okay, solar, different things like that, and also obviously AI, right? Everybody knows about the AI hype right now. There's increasing lithography intensity on future technology nodes. That's also driving demand. And ASML will need to apply for export licenses with the Dutch government for all shipments of its most advanced immersion deep UV lithography systems. The new Dutch export regulations will come into effect on September 1st of 2023. They have advanced systems, so booking for some of their advanced systems are coming in, which carries a higher ASP and could be used for both 3 and 2 nanometer technology. All right. Their unique position is the EUV lithography. ASML is the only company in the world that produces extreme ultraviolet lithography machines, a technology essential for manufacturing the most advanced semiconductor chips. And the EUV machines allow for the production of smaller, more powerful, and more energy efficient chips, which are crucial for the technology and products developed by companies like NVIDIA, Taiwan Semiconductors, Intel, and Apple. So that's where we kind of get the whole phrase of all roads lead through ASML. And so when you look at their impact on other companies, and you start off with NVIDIA, which is a leading graphics processing unit manufacturer, they rely on advanced chip manufacturing to produce high-performance GPUs for gaming, AI, and other applications. ASML's tech enables the production of these advanced chips, making NVIDIA's cutting-edge products possible. Also, TSM, the world's largest dedicated independent semiconductor foundry, depends on ASML's EUV lithography machines to manufacture chips for various global technology companies. ASML machines are essential to TSM to maintain its leadership position in the foundry industry. Intel, which is also a major player in the semiconductor industry, also relies on advanced chip manufacturing technology to produce its microprocessors and other products. ASML's EUV lithography machines play a crucial role in enabling Intel to manufacture advanced and efficient chips. And of course, Apple, a technology giant, requires advanced chips for its wide range of products, including iPhones, iPads, and Mac computers. ASML's technology indirectly supports Apple by enabling the production of advanced chips used in Apple's products. So in essence, the phrase all roads lead through ASML underscores ASML's pivotal role in the semiconductor industry. The company's unique and advanced EUV lithography technology is fundamental to the production of advanced chips, which in turn are crucial for the operations and products of major technology companies like NVIDIA, Taiwan Semiconductors, Intel, and Apple. Without ASML's technology, the production of advanced and efficient semiconductor chips would be significantly hindered, impacting the entire technology industry. So basically, the bullish thesis for this company is that there's strong demand for advanced products. The demand for ASML's advanced and mature nodes is robust, driven by significant growth drivers like AI and electrification. This trend is likely to continue as the semiconductor industry evolves, leading to sustained revenue growth. Now, they've had growth despite uncertainty as well. So despite the macroeconomic challenges and uncertainties, ASML's strong backlog and expected growth of around 30% this year demonstrate the company's resilience and strong market position. And of course, they have their advanced technology, their focus, on the advanced technology positions the company well to benefit from the industry shift to smaller nanometer technology, providing a potential uplift in revenue and gross margins. In the regulatory compliance, their proactive approach to adhering to new export regulations ensures continued global operations without significant disruptions, maintaining its market reach and its customer base. So in conclusion, ASML's advanced technology, robust demand for its products, and strong growth expectations despite macroeconomic challenges present a bullish outlook for the company. Investors may consider these factors as potential drivers for ASML's continued growth and market leadership. So let's go into their bullish scenario here. All right. And they've indicated a potential to reach an annual revenue in 2025 between 30 billion and 40 billion, and in 2030, an annual revenue between 44 billion and 60 billion. Given the strong demand for their products, especially the EUV lithography machines and the broadening application space in semiconductor end markets, it's possible that ASML could reach the upper end of this projection by 2025 and continue on an upward trajectory towards 2030. In their margins. So with the introduction of more advanced systems, ASML can command higher prices, leading potentially to improved gross margins. And when you look at the stock price prediction, given the strong revenue growth and potential margin expansion, the stock could see an increase of 20 to 25% annually, leading to a potential doubling or more of the current stock price in 5 years. So that's basically anywhere from an 80 to 100% increase over the next 5 years for the stock. That is the bullish scenario here. The bear scenario is that they reach the lower end of their projected revenue, achieving around 30 billion by 2025. This scenario considers significant challenges, including potential geopolitical issues, export restrictions, and a slowdown in the semiconductor industry. And then their margins would end up facing pressure due to increased competition, potential pricing challenges, and increased costs. And so the stock price sees a modest growth of 5% annually, leading to a 25 to 30% increase over the current stock price in about 5 years. And the base scenario is that they achieve the midpoint of their projected revenue, reaching around 35 billion by 2025 and 52 billion by 2030. This is still a significant growth, but considers some of the uncertainties in the market, including potential macroeconomic challenges. The margins would remain stable with slight improvements as ASML continues to innovate, but also faces increasing competition and potential pricing pressures. With the steady revenue growth and stable margins, the stock price could see an annual increase of 10 to 15%, leading to a 60 to 80% increase over the current stock price in 5 years. So that's basically it for today's video. Remember, this one was a viewer request. All right, you can do those and submit those via the Ko-Fi platform using the link in the description as well as the comment section, where you'll also find a link to sign up for the newsletter, Investment Intelligence. It's completely free to you guys. It's really good, free, valuable content. And as I mentioned, I try to sprinkle in a couple free trade ideas in there. Okay, it's a great way to support the channel, help me grow my brand, while also, helping yourself out and getting some good knowledge along the way.